Welcome back. You're watching us here on Chartbusters. Let's talk about RPG Life Sciences. The company reported a subdued set of earnings for the first quarter, and that was understandable because we did have a fire incident in one of their plants. Ashok Nair, who's the managing director, joins in to discuss the numbers in more detail. Thanks a lot, Mr. Nair, for joining in. You know, your domestic formulations up near double digits, no problems out there. International formulations were lower, and API was sharply lower because of the fire incident. So the question is the worst behind? Are we producing enough in the API business, the production back up to speed? And in light of what's taken place in the first quarter, what's your outlook for the full year for domestic, international and API?
Good morning. Pleasure, first of all, me being here. So as you rightly said, our domestic formulation actually, which contributes to almost 70% of our portfolio, has outperformed the market growth and registering a healthy 10% increase versus the last quarter. And of course, the growth is driven by a well-crafted transformation agenda and execution excellence. As you said, the API business witnessed a subdued Q1 performance due to a temporary sales impact from a fire incident at our API plant in January. Now, a dedicated team of almost 155 professionals is working on restoring the plant, which completes in the Q2. So as you said, we will be in a position to see that all those orders which were in pipeline, which is getting deferred for the coming quarter, should be fulfilled. Both international formulations and API going forward because those are the two important pillars for us too. So along with the domestic, we need to fire in this too. And I believe from Q2 by August, September, we should be back on track. And the full year, we should continue to deliver as we've been delivering in the last many years.
That number, sir? Mr. Nair?
Yeah.
What is that number we're looking at for the full year in domestic, in international and API?
So, Nigel, normally, we don't give a forward guidance, but if you can see our past track record, you can be sure that we should be there in the same level, and our EBITDA margins also should be positively as we have done before.
All right. Hi, Mr. Nair. This is Nigel here. You're sounding fairly satisfied with regard to those numbers. However, the street is a little disappointed, as it's evident by the share price reaction. It's down 8.5%. But as you're saying, whatever was deferred in the past quarter will be made up in the coming quarters.
Absolutely.
And we take that point that there's no guidance that you'll give, fixed guidance. But at least if you could indicate directionally, will it be a double-digit growth? First quarter, you've grown by only around 2% on a blended basis.
Yeah.
If double-digit, if yes, what could we work with? Mid-teens?
So we'll be a double-digit growth.
Okay.
It'll be just between 10 to 13.
10 to 13.
So that should be there, yeah.
All right. And margins, if I look at it on a year-on-year basis, they've improved, right? Though you didn't have operating leverage, but it's improved from around 18% ballpark to around 21%.
Yeah.
You mentioned in the past you would like, I think, to go towards mid-20s. But this year, what should that number look like?
So again, as you said, but yes, as I said that...
It'll improve from year on, sir.
It'll improve.
It'll improve from year on. Can we work with 200 basis points improvement from what you report in the past quarter, which will give us in that vicinity of around 23 to around 24% margins? Gettable?
I agree that. Yeah, absolutely.
All right. Margins between 23 to 24%. What about, Neprosin? You had expected this business to do about 100 crore in sales. A couple of years ago, you said that it will become 100 crore in the next couple of years. Where does that number stand at? That's point number one. And secondly, on your Ankleshwar plant as well, it's been under US FDA warning letter for the last 12 years. Has there been any updates there?
Okay. So I'll answer fast. So our Neprosin is on the growth track to become 100 crore within a couple of years. In fact, the first quarter, we have grown by 17%. So Neprosin, the strategies which we have put in place is working. And yes, we will be at 100 crores as what we had earlier said. As far as the US FDA, we have not further pursued on that. And currently, our whole operations are minus US. So and we need to have a very strong product line to see that we start operating and the US FDA guidelines and the cost impact on that. So we are going slow on that. And we are not planning to enter into US at least for the next 3 to 4 years.
All right, not planning to enter the US for the next 3 to 4 years, so that keeps you away from the US FD, at least in the Ankleshwar plant. What about new products? You said that your Indian business grew or domestic business grew because of your strategy. New products were up to 20% of your sales. You were expecting this number to grow. Where does that number stand at right now? And where will this settle over the next, say, year or so?
So currently we are at 2.6% growth in new products, which if you compare with the industry, in fact, is a shade better. And going forward, the strategy has been to get more niche and specialty products. As we already have a strong presence in nephrology, we would like to replicate that in the rheumatology and the gastroenterology space. So all those products which are in pipeline are in line to see that we enter that segments.
Very quickly, sir, inorganic growth, we'll hear about it in quarter 2 and quarter 3. Is there a target you're focused on?
Yeah, so we are looking into both API and this thing. There is a target. We wish to see at least by first quarter next year, we should be having something.
First quarter of next calendar year. That will be January, March quarter.
Yeah, so let me not put too much of in this thing, but yes, we are working very strong.
And the size could be how much?
Nigel, let's
Potential revenue, sir. Potential revenue from the acquired unit. We know you have the appetite, but how big is your appetite? We just want to understand that.
We want to have something which is a prudent value, which actually sees that it is accretive to all of us. So let me not get into that, but we are open, Nigel. We are open.
What's the cash on your books, sir? What's the cash on your books? I remember it being over 100 crores as surplus. Where does it stand at now?
We have 266 crores in our book.
266 crores. And you will not require any other funding for acquisition. So we'll get a sense that you will acquire from your own cash itself.
We will decide that. It can be in any structure.
We'll let you go at that, Mr. Nair. You've given us a sneak peek. We look forward to chatting up with you at the end of next quarter. Maybe there'll be some progress on this front. But thanks a lot for joining in. The past quarter was a little subdued. You're guiding for better times ahead.
Thank you.
On that note, though, we'll wrap up on this edition of